Happy New Year, everybody, and welcome to my little discussion today about equity crowdfunding. We're going to get started in just a couple minutes, and I want to make sure we get a few people logged on here to check us out. Once you get online today with this tutorial of what we're going to talk about here, make sure to share the video. Make sure that we can get this information out so that folks can really see what's going on, learn about what we're talking about, and find out what it is that has me so excited about equity crowdfunding. I've been very excited about this from the first time I heard about it. I saw it at that time for what it was and what other people see it as, which is a wonderful tool to jumpstart businesses, obviously, which is how it started. But to create a plan to create what we call impact investing, which is to basically take what could be a byproduct of equity crowdfunding and create a strategy from that. And that strategy is built around economic development and what we need in our community, which is jobs and economic development, growth. We want businesses there. We want the inspiration that creates and a lot of those other things. So give me just a minute. We're going to get started with that. I hope you can see the screen behind me. If you cannot, let me know, and I'm going to be talking through a couple of things on that screen. We're going to make sure we can get everybody involved in this conversation. Leading up to the launch of the Native Sons offering, which you'll see coming up around January 15th, I'll be doing a lot of these informationals and tackling different parts of the issue. So today we're going to deal with a specific segment of things, and then in future broadcasts we'll talk about other elements of it that I know people are concerned about. Everybody is not an early adopter. Everybody is not an immediate believer in the power of equity crowdfunding. So for those, we want to make sure that we show you what's in it for you, what's in it for your community, and what's in it for the people that you love, even as everybody really has a part to play in this. 2017, everybody's all excited. Everybody's really ramped up about what can be possible in Chicago, in Illinois, in the United States. And equity crowdfunding is one of those things that's going to allow us to do I won't say everything, but a lot of what we want to do without any further political intervention. And it doesn't really matter what the governor, what the mayor, or the new president does. If we use this properly, we will be able to gain a lot of benefit for ourselves. One of the reasons why it's important to me to do equity crowdfunding this way, and the way that I'm going to describe to you today, is not only because of the impact that it can have on our communities, but of course the inspiration it is going to provide for other people who need that access to capital. You know, as a person hosting hundreds of networking events over the years, I've seen and met thousands and thousands of you, and thousands of you have been introduced to each other because of those events that myself and my co-hostess Fuzzy did, you know, for all those years at Red Kiva and in South Loop, and now the Hyde Park Happy Hour. But I recognize what your challenges are. I know what your needs are, and as I started lobbying and working with the SBAC, and this issue of equity crowdfunding, intrastate equity crowdfunding came up, it was just something that I grabbed a hold of right away and decided that this is going to be the thing that I believe is going to be a game changer in our communities for small businesses in general, but particularly in our community if we use it the right way. And aside from, or kind of as a matter of difference from what we've dealt with before, what I want to do is make sure that we are aware of this from the front. The small business owners in our community are aware of this at the start, and that this is not something that 3 years from now you look up like, oh, that's happening now. No, this is happening now. And so we want to make sure that you're on the front end of it so you can benefit from it. That benefit to you can come as a business owner who's looking to raise money, or as an investor who can invest as little as $100, $250, $500, all the way up to $5,000 now on these different projects. So let me get started now, and I'm going to start talking to you about a couple of different types of crowdfunding. Particularly, you know, you have Kickstarter, which is a rewards-based or charitable donation site where you can go and basically put your money into a business project that someone is doing and hope that they become successful. And in exchange for that, you'll get, you know, you'll get a product or whatever it is that they might be trying to develop. You'll get a service. You'll get some type of trinket or gadget as a reward for putting your money into what it is that they're doing. But again, that's considered to be a donation and not one that you can expect to see any type of financial return from. Indiegogo, GoFundMe, on those sites you see a lot of folks that are looking to get donations for movies and plays and sometimes very obscure things like their personal needs to pay bills or to go to funerals or to have services for people, different things like that. And those things are great. But this equity crowdfunding is something totally different. This is something where everybody who puts money in has a reasonable expectation of getting something out. Now, again, all of these are not businesses that will succeed. However, if we do it the way that I'm talking about doing it, I think that we can raise the ratio in proportion of those that succeed versus those that do not. So, starting with that, there's two different types of equity crowdfunding, or two different segments in which you can go in. You can go in federal level equity crowdfunding. Most non-accredited investors are doing what they call Title III, which is a national crowdfunding base where you can basically send out your issuing to people all over the United States. Your limit on raising money in that respect is going to be about $1 million. What I am involved in and what I'm talking about here today is intrastate equity crowdfunding. That means that the funds that you raise from crowdfunding have to be raised from people who are citizens or businesses that exist inside the state of Illinois, for a business that works inside the state of Illinois. And there's a couple of reasons why I like it that way, why I prefer it that way, because it helps to create this thing called impact investing that I'm going to talk about, but it also deals with, has a lot to do with the way that the limitations are set. So in intrastate equity crowdfunding that was passed in the state of Illinois, it actually became law January 1st of 2016, so we're already a year into this. It took the Secretary of State a little while to get their ducks in a row and get the rules and regulations set up the way that they wanted them to make sure that the right consumer protections and everything are in place. Now, in an equity crowdfunding project, intrastate-wide in Illinois, you can raise up to $1 million for your company without having audited CPA financials. Each individual person can invest as little as whatever the minimum for that offering is, which could be as low as $100 all the way up to $5,000. The idea is that we don't want, the state didn't want, and we as those who lobby for this bill did not want it to be something that you could put all of your eggs into a basket and then go out and lose, right? So intrastate equity investing became available to non-accredited investors. So everybody that's in that 99% that we talk about, those of us who have been really shuttered out of bigger opportunities that have occurred over the years, we've never been able to get into that, because if you're not an accredited investor, you're not going to be able to get into nobody's going to let you, even if you have, let's say, $25,000 in the bank, if you're not an accredited investor, if you're not making $250,000 a year or have a net worth of $1 million, you can't go take that $25,000 legally and go put that into a publicly offered entity because you're not still an accredited investor. This will allow you to put that very little amount of money, up to that $5,000 per project per year, into various businesses that you find benefit in. If you had $5,000 right now to invest, you could break that down in several ways. You could invest it in 10 projects at $500 each. You could invest in more projects or less projects. It's just up to you as to how you look at it. Now, in Illinois right now, we have a couple of sites that are set up as portals where you'll be able to go and actually look at these investment offerings, and you'll be able to see what's available and out there. On a federal level, there are several websites that are set up that are already running these campaigns. They're already raising millions of dollars, and that's just been going on since May of 2016, when that actually became open to the general public after the SEC had written the rules for Title III crowdfunding. So today what we're going to talk about is this impact investing, and what I'm talking about with impact investing, and how the other day I put up a post and I asked people, what are the 3 impediments to black businesses in our community, to building and sustaining black businesses in our community? And the most popular answer in that was access to capital. Of course, that heads the list on anybody's list, and that's a very universal answer. That's not just specific to the black community or the Latino community or even white startups, in more affluent communities. They have that same issue a lot of times with access to capital if banks are not lending, or if entities are not there with the money for the specific thing that they're trying to build. Sometimes these ideas, these new technological advancements and other things require a person to really be able to believe in what it is that you're doing to give you that type of money. And traditional financing routes don't always take that. Venture capitalists do not always agree with your passion about what you want to build. And so now you have a new way to go about doing that. One of the second issues that I saw come up quite a bit in that post was support from the community, meaning that we're not supporting the businesses, the small businesses that are owned by us in our own community. I'm going to address that as well. And then third, this was like a huge one. Customer service, man, everybody like went crazy about customer service. So in a subsequent post, I asked people to give customer service referrals for people who do training so that whoever sees a need to bridge that together can go ahead and do that. If you know a business that needs better customer service practice, right there in that other post, you have a bunch of people who are skilled in customer service training or what have you that might be able to tie that together and make that work. Also, there was someone that mentioned entitlement, meaning that sometimes our business owners in our community feel like, hey, you're supposed to come in here. You know, I'm a business owner from this community. I'm local. I'm black. I'm this. I'm that. And I feel entitled to your business. That is another huge issue. And then the issue of security. You know, you go out and you spend all of this money to open up a store, a restaurant. You want that place to be safe. You don't want it being a situation where someone's running in there and doing something and, you know, you're having that type of problem with break-ins and such. So I'm going to talk a little bit right now about that particular part of it and how equity crowdfunding can address those issues. Now, I hope that you guys can see this screen. I'm going to blow it up a bit. But what this is a map of the city of Chicago. And what I want to do is I'm going to call your attention to just a very, like a hyper-localized area here. This is 71st Street on the south side of Chicago in Auburn Gresham. What you see right here, this is the Dan Ryan Expressway, okay? This is 71st Street. This is going all the way down to 87th Street. I'm sorry, we're going to go from 71st to 87th from the Dan Ryan across to Ashland. And this is Auburn Gresham, right? Now, Auburn Gresham, which is beyond this little bit of a pocket here, but this covers most of Auburn Gresham. Auburn Gresham has about 40,000 citizens in it that have a median income of about $34,000 a year. Now, that may not seem like a lot of money to you, but in a report that I received from my good friend Ken Smichael called The Buying Power of Black America, which I'll be happy to share with anybody who sends their email address to my inbox for this report, you find out what it is that we really spend our money on. In various segments, it's broken down to a very fine line, and it breaks it down all the way down to the city. Now, a lot of you may not know it, but in incomes, African-American incomes in Chicago, 2013, that statistic was $30.5 billion in income in the African-American community. So what that means is that whether you think so or not, there is money to invest in these different projects. So I want to use an example of something, right? We're going to use an example of a restaurant, a nice restaurant that sells standard American cuisine, hot dogs, hamburgers, French fries, little fish, some veggie items, maybe a little bit of maybe some beer, different things, and maybe have an event venue attached to it, similar like Promontory in Hyde Park, right? Now, if you had someone who wanted to open a business like that inside this area, that money to do that can be raised from anywhere inside the state of Illinois, right? It can be done from anywhere inside the state of Illinois. But the thing that you would want to do to create an impact for those investment dollars, because this could go two ways, right? You can get that money from everywhere outside of this community, build that business there, but then you got the same problem you got now because nobody inside the community is benefiting from it other than having another place to go spend their money. Nobody is profiting from it from a profit standpoint. Nobody's making money back from it. Nobody is tied to it emotionally. Now, let's say if you did an equity crowdfunding project to build that business and we raised $1 million, we're just going to raise $1 million to do that. It's $1,000 from 1,000 people. You can do the math and break that down on what type of crowd of people you really need to do that. But let's say you wanted to make sure that you really targeted the people inside this community to raise, let's say 20 to 50% of that $1 million, right? Which you can get from inside this community. And I'll show you later how that part can be done. So what happens now is that we've already solved the access to capital issue because we just raised $1 million from everywhere in the state, from parts of Chicago, and now we've raised a significant portion of that from right inside this community. So we've solved the access to capital issue just by doing that alone. So let's talk about community support. Because this is a consumable product business, meaning I can go there and eat, I can go there and maybe have a drink, have a dance, or see a band play, or whatever the case might be, then that means that everybody who invested in that project that is within general reach of that project is going to want to come and patronize that business. So let's say it was 1,000 people at $1,000 and 200 of them came from right within this half-mile radius of that business. They're going to support that business because now they own a piece of that business, right? I don't think anybody would argue with that idea. That people inside of this community are not only going to buy their products there, and they're going to go there for entertainment, they're going to go there to buy lunch and breakfast or anything else that's being offered, but they're also going to promote that, they're going to share that, and so doing it that way becomes an organic marketing tool. So now, as the person who raised that $1 million, now, instead of having a marketing budget that's, 20% or 30% of that amount, you can reduce that because you raise the money on a hyper-local level, you have organic marketing that'll come into play. And now you can shift some of those dollars to something like customer service. And now you can have people that are being trained, and you can come in and have a staff that's trained in customer service on the front end of that project, and it can actually be built into the financing of the project. So when you put the project up on one of the portals for the public to see, what's going to happen is when you put that project up there for people to see on the portal, all of the costs, the way you're going to spend the money, all of that is laid out in that presentation, okay? So now you can put a line item in to make sure that you have an adequate person, whether it's a Latasha West or chemistry, Kim, or anybody like that, to come in and train your people on customer service and make sure that from the start, you got a good, strong, viable, sustainable business in that community. Now, so we'll move from that to entitlement. You have to come shop here. I'm a black-owned business in a black neighborhood. I am a Latin-owned business in a Latino neighborhood. I am a Bucktown resident building a business in Bucktown. Either way, that sense of entitlement is damaging to a business owner. So what does equity crowdfunding do? Because that money is raised on a hyper-local level and even a macro-local level, now what was once entitlement shifts to responsibility. And now it becomes the responsibility of the business owner to build a business that you want to patronize, because now he's accountable to his entire community for what he does. He's accountable here, and he's accountable here. He's accountable throughout the state or anywhere else that he got that money from. He's accountable to that. And so as he goes forward and he has to look at how to pay distributions and make quarterly or annual reports to his investors are you. His investors are the people who live next door and down the street from that establishment. So those things are changed overnight. That's not something that is going to take you 5 years to change. That's something that changes almost immediately by default of how you structure these offerings and these campaigns. Now we'll talk about security for a second. Now, in our community, we have an issue sometimes where, I won't say sometimes, I'll say most of the time, we have crime running rampant in a lot of these areas, and we have a situation where nobody wants to work with the police or help the police. We have this no snitching thing going on, and that's widely publicized, so me saying that here is nothing new, okay? Now, what happens when somebody comes in and breaks in that store in the middle of the night, but 100, 200, 300 people inside that community are investors in that? Do you think that that same rule is going to apply then? I think not. I think that the gentleman whose grandmother, whose aunt, or who himself has invested in that business is going to find whoever did it. He's going to find out whoever did it, and he's going to report that to the proper authorities, and it's going to start to help to change that security dynamic. Again, that's something that happens by way of how you do that, because now you have a community that's invested. It's no wonder that people won't talk about things that are happening when they are essentially protecting people who are not reinvested in their community. So the store that's down the street right now, the store that sits at the corner of 71st and Morgan or 71st and Racine somewhere right now, somebody sees something happening, they don't feel involved in that because they're not invested in it. They don't have any return, no matter how small or minuscule that return might be. Now, $100 investment, $500 investment, a $250 investment is not, in most cases, going to yield you some kind of huge, ridiculous return, right? But what you're going to do is you have an opportunity with that investment to impact the business owner who is putting his money, putting his cheeks on the line to get something done. You're investing in the reestablishment of your community. You're investing in the jobs that business will create, not just for itself, but now that vibrant business becomes an attracting hub for other businesses. Those of you who use Airbnb as a tool for your property to earn money from having your property, now you get to put on the Airbnb report that this business and the other business and the other business that just opened up because of equity crowdfunding, these businesses are in your community now, making your property more attractive. So this is not always a singular thing. There's a wide peripheral effect that plays in from what it is that you do when you crowdfund in your community. So two different sides here. You got the investor side and the issuer side. The investors are the ones who put the money into the projects. The issuers are the ones who create the projects and then offer them back to you. So most of us, or a lot of us, I have never made an investment officially in a Wall Street investment opportunity. I didn't invest in the Facebook IPO. I didn't invest in Twitter or any of the rest of those. I hope to maybe invest in Snapchat when that goes live. But that's only because now my knowledge base has grown to the point where now I really understand how that works. So if you're a person that's always been threatened by that or didn't understand how that worked or felt a little intimidated by what it creates, equity crowdfunding and the levels that you're able to get in at gives you an opportunity to put a small amount of capital at risk while contributing to the development of your community. But now you also get the opportunity to own a diversified portfolio of these community-owned businesses. Now, these businesses are not just happenstance, throw them out and see what happens type of offerings. The offering that we have right now that we're putting up that's going to launch on the 15th is called Native Sons of Chicago, and that process or that project is being vetted right now by the Secretary of State. It's already been vetted by the portal owners, Veslo.com. So what happens is every one of these projects has to be vetted on a couple of different levels before you even get to see it. So that means that by the time you see our project will have been approved for a fundraise by the Secretary of State. It will have been approved by the portal. So you've already crossed a couple of the layers that you have in terms of trust for the veracity of the project. Now all you got to do is get down to brass taxes and figure out, hey, can this person really pull that off? Can they really, is this restaurant going to really do well there? Is the person that's offering this project really able to manage that project? Now, if you're a person that's interested in raising money as an issuer, please know that this is something that you're going to have to come correct at. You're going to have your ducks in a row. You're going to have all your paperwork, your filings done right. You're going to have adequate legal representation because you're asking 1,000, 2,000 people or whatever that number is to invest in something that you're doing. And so you have to make a dynamite presentation for that. This does not only work for new businesses. So I think it was on Kickstarter. There was a company called Oculus that did virtual reality technology. And Oculus had a Kickstarter campaign where, if you put a certain amount of money in, you get one of these nice little headsets or whatever. And from what I understand, it was a couple of years ago. I didn't know about it at the time. I really just learned about this. Oculus got bought by Facebook for billions of dollars. But none of the people who put that initial money in that seeded that operation and helped to create the buzz that ended up bringing Facebook to the table, none of them got any money from that. They got their VR headsets, but now those headsets are either currently or will be soon outdated. So they really got nothing for that. If that was something that they were doing as an equity crowdfunded project, everybody who put money in that, I think the gentleman told me $1,000 or $500 got you like 16,000, some crazy number based on how much Facebook had bought them for. Everybody would have gotten paid. But this isn't really about those opportunities as much or chasing those type of opportunities as it is, at least from my perspective, about using it as a tool to develop your community and develop the businesses in our community that could create the jobs and be the economic answer that we need. Brand building. It doesn't have to be a new business that does this. Let's say you've been in business for 10 years. and you've been hitting a ceiling. You've been just operating. You open, people are coming in, people are patronizing your business. As an existing business that's been open, that's got buzz, you have an opportunity now to take your business public on Main Street. It's not a Wall Street IPO. It's making your company public on Main Street. And now you can sell shares of your business back to the community at large, but also specifically to the community that you serve. So again, if you're a grocery store, if you're a mom and pop operation or any type of business, a mechanic shop, body shop, a liquor store even, in this community, in that community, or any of our communities that does that, you get the opportunity now to sell shares of your company to the public, and now you're still going to bring that organic benefit in. They're going to come into your shop. They're going to do business in your shop. They're going to promote it because now everyone has a vested interest in it. Now, crowdfunding, and even equity crowdfunding for that matter, is not anything new. It's new on the levels that I'm explaining to you. And what's new about it is the opportunity for us to really see it this way as a tool that we can use to really develop our communities. Now, I know that people in on the north side of Chicago, the west side of Chicago, in the suburban areas. In fact, the idea for this came from one of our, there's people in western suburbs that are using it, south suburbs that are using equity crowdfunding across different scopes to build businesses even in those areas. So this is going to be one of those things, and like my good friend is saying here, is going to level the playing field for small investors and small business owners because now it gives you a chip in the big game. So now, an existing business, now you take that company public, now you take years of, say, stagnant growth, and now you can accelerate that. You can elevate it, or you can use it as an expansion tool for your business. So now, if you were Harold's Chicken, if you were Uncle Remus, Bill Coney's on here, if you were building forever yogurt stores, now you get to spread that out because now you've resolved the access to capital issue for people who would want to own one of your stores. You've resolved that issue. You've resolved the support issue. You've given yourself a chance to resolve the customer service issue. The entitlement and security issues could also be resolved by default. So that's a little bit, guys, about equity crowdfunding and kind of what it is at its core. And I get real excited about it, and people, I've had a couple of people, believe it or not, that told me, like, man, you don't know what the hell you're talking about. People are not going to be involved in that. They're not going to invest in that. And I say you're wrong. And I say that our Native Sons Project is going to prove you wrong. We know that people in our community are prepared to invest in our community. I'm not one of those people that you've ever seen saying that we need, whenever you see people talking and they say, well, what do we need from the governor? What do we need from, we need resources. Well, what is that? What is resources? Resources is money, it's business, and it's things that create jobs. We are not living in a world, and I don't want to get political here, but we don't live in a world where somebody's going to come and build a factory in our neighborhood that employs 10,000 people. They're not going to build that anywhere in Chicago, really, unless it's building it for automation and robotics and things like that, some futuristic type of point. But you're not going to build cars. You're not going to build auto parts. You're not going to, those things have passed us now. And we're operating in a new economy where the real manufacturing is done on the internet. It's done with 3D printers like they got at Blue 1647 with Emil Cambry and the work that they're doing. So with all of the creativity that's coming out of that hub, where are they going to get the money from to make those concepts real for us? For even not us as black people, but us as consumers. Because everybody that's on this post is not black people. Everybody that's going to benefit from equity crowdfunding is not black people. But I'm taking it as my personal mission to make sure that we do not get left behind. Because this is available to everybody. So if the gentleman that owns the liquor store in your neighborhood, he's owned it since you were a kid, and all his children have come up now and they're running that store, he can actually use this to buy more stores in your community if you choose to let that happen. In our community, if we choose to let that happen. Or we can grab this bull by the horns and start building our own. It doesn't mean keep anyone else out. It's not an exclusionary thing to where it's, oh, I don't, and I certainly don't want to over-racialize the issue. But those damning murder statistics, the majority of that is happening in our community. And when anybody asks the question as what the solution is, it's jobs, it's economics. But politics without economics is symbol without substance, and we need economics. So this gives us an opportunity to put that money in our own hand. I see some pretty outstanding people that are chiming in on the board here. And one of the things that I know that you guys know is that from a capital acquisition standpoint, people tell you this. They say that the best time to ask for money from a bank or institutional lender is when you don't need it. So when you can show that you got $100,000 in the bank, it's easy to ask for $100,000. But what happens when we start to build businesses without banks? Because everything I'm telling you about now can happen without ever using a bank to raise the money. The only thing you'll need a bank for is to put the money in once the money comes in from the public, from the crowd. But you don't need a bank to do this. So then what happens when you've built 5, 10, 15 businesses in your community, redeveloped 15, 20 properties in your community, and never asked the bank to come get their beak wet at the table? What do you think is going to happen? What's going to happen is that now you're going to get flooded with resources that everybody had told you up to that point were unavailable to you. Because everybody wants a piece of the action. Everybody wants to get cut into what's going on. So what I'm proposing to you today is to advocate for and help me to make this strategy real. Help me to create an impact investing cycle that'll drive banks, drive municipalities, drive the city to want to do more for us because they see us doing more for ourselves. And that's not just, again, that's not just blacks and African Americans, that's small business owners in general. When our community is doing more and these businesses are getting funded, we got 10 in Bucktown and 20 in Wicker Park and 15 in Naperville and 20 on the west side. Now they're going to have to figure out how to come in and support that. And they're going to have to support it with different resources. It gives you more power and leverage with these aldermen, with your aldermen, with your state representatives and your state senators to say, hey, listen, we really don't need you to bring that in. You can focus on policy now because we got the economics of this figured out. So now, I'll give you an example of something. We have, in sports and entertainment, we have athletes make millions of dollars. Major League Baseball, NBA, I don't even bother to try to count how much money our athletes get paid through those mediums, right? And a lot of people knock them for not doing enough for their community. LeBron James does a lot. We know a lot of them that do, right? But what happens if you say this? If you went and you told Dwayne Wade, listen, we're going to open up 5 restaurants in these various communities and we're going to build money using this hyper-local type of strategy. How would you like to, instead of you taking all the risk and putting all your money at risk, why don't you become a partner with the community now? Let us raise that $1 million or $2 million from the community and then let you come and put the other 2, 3, or 4 million in now, and now you're a partner with the community. Maybe now, instead of the big developer downtown coming to the city to get TIF money, he comes in and says, hey, we'll take $4 million, that maximum. We'll take that from the crowd in the community that we're building these projects in. And now everybody's got a piece in the game. That's where the new economy is going, guys. It's a revenue shared environment. You can look all over the world. This is happening. This is going on. So when all of the naysayers, I'm just telling you, this is going on all over the world. I'm going to show you a couple of real simple examples in just a minute. But look at London and the UK, what they're doing. If you just Google equity crowdfunding United Kingdom, you're going to see it. I'm telling you, it's going on. So everybody's saying that, oh, well, we need to see it work, and you can study long and study wrong if you want to while other people are going to build. But I'm saying this now so that you'll never be able to say that I was sitting at the table and didn't come back and share this information with small business owners throughout this city, throughout this state, and particularly in the community that I come from. My interest in the map that I laid out to you is that I'm from that community, a little bit further west, but I'm from Auburn Gresham. I went to Simeon, SVS class of 89, and I want to see that community develop. I want to see, I drive through these neighborhoods every day and I'm looking at hundreds of vacant properties while the person who needs a job is standing there in front of that property when he really needs to be inside rebuilding that property, right? So it's like acres of diamonds. The jobs we need are right up under our feet. The jobs we need can be created by us right up under our feet. We've got enough vacant land, enough vacant properties in our community to do that, and we need housing. So there's another housing boom that's starting to tick up. In these areas, you're starting to see redevelopment and rebuilding going on all over the place. The rental market is sky high. Are you investing in real estate and getting rental property to make sure that the people in your community have a landlord in you that's going to do right by them and treat them with respect? Are you doing that, or are you ready to do it? Again, it's acres of diamonds. Everything we need is right up under us. So you don't see me marching and protesting down the street. This is my contribution to that for you right now. This is my contribution to that game right now. I'm going to put what I have into it. I've given a lot in the way of sacrifice for this to a degree that I don't even need to mention, but this is my offering in that respect. I mentor and talk to young people a lot and young men in the street. I understand how that game go. That's fine. But right now, I'm about the economics of this whole political thing. So it's about how are we going to take what we have in our own community and use it to bring ourselves the benefit we want. How can you ask? Let's just be real about this for a minute. You go and we say resources, 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 but nobody puts a definitive marker on what that really is. And you say that to the mayor, or you say it to Governor Rauner when he comes down. You say that to them, but you don't necessarily have an answer for that. Now they are looking at that saying, wait a minute. If you go to I know for a fact there's over 2,500 vacant properties in the hood in Chicago. There's like lists of them, like thousands of them all over the place. You see them boarded up. You see them with the red X's on them. But nobody's ever come with a plan to do all of that, to redevelop it all. But you could use equity crowdfunding to get that type of thing started. And that's what you're going to see from Native Sons. So without going too long here today, guys, let me move into the next part of what I wanted to talk about. And this is, I want to show you something. This is called Local Stake, right? So this is Local Stake, STAKE.com. This is a equity crowdfunding site in Indiana. I think it operates in Indiana, Michigan, and Wisconsin is where most of their raises come from, right? But take a look at this. This is a place called Scotty's Brew House on 96th Street in Indianapolis. So if any of you are familiar with Indianapolis, you'll know right where it's at, right by Ball State University. Now, a minimum investment of $500, they've already raised $386,000 to build this. Let me blow this up a little bit and make sure that we can see it on the screen. Hopefully it'll reflect that way for you guys there. But this is what they're building here. Brewery, restaurant, patio, whole piece. Similar to some of what you see in our community today, like Renaissance Bronzeville, the new spot that took over for Jokes and Dotes. Great place. Tantrum, the owners of that got together and they put something wonderful together. But now we're moving into a piece where the community can own a piece of these businesses when they start, or they can own a piece of those businesses after they start. Yes, Keisha, that is a bar. That's in Indianapolis, but you'll have a lot of those coming up because a lot of the projects that you'll see as you start to surf and navigate the crowdfunding environment, you'll see that microbreweries and restaurants are big. That's something that people are doing a lot of. But I'll show you something a little more obscure than that you'll find funny here, right? So this is another one. This is a wood, they're currently selling wood-fired pizza via a mobile oven. They've raised $110,000 at a minimum investment of $500. Now, when you go to these tabs up here, I can access their financials because this one is already funded. I can't see that, but it'll show you their financials, the funding, meaning how much money is coming in over the timeline, their corporate documents, the perks that you get. And you get to see their entry video that shows their concept and how they do it. They have their business plan here. Their management team is outlined. Everything that you need to see to make an informed decision as an investor is there. So if you're an issuer, this is the information that you need to be putting out to make sure that people can see. Here's another one. This is what I find really, really interesting, right? It's called Chop Saver. It's a musician invented dermatologists recommended lip balm, like chapstick. But it was invented by a man who's a jazz musician and whose lips would get chapped from playing the trumpet. Now, you might think this is pretty goofy, but at a minimum investment of $2,500 a person, he raised $93,000 and hit his target. And so while you think, oh, lip balm, who's going to invest in that? Here's his commercial right here showing that his product is offered at every CVS store in America. A musician invented lip care. Niche product. Something that a lot of people, if somebody walked up to you and asked you to invest in that, you'd be like, man, cut it out. He raised his money. He's got a national contract with CVS, and he's doing what he's living out his dream and doing what it is that he envisioned one day that he could. Your children are full of wonderful ideas. My children are full of wonderful ideas. But how do we encourage them when we know that access to capital barrier exists? How do we encourage them when we know that support from the community issue exists? How do you encourage them when they walk into a store and the customer service is horrible and you want to tell them that they need to go into business and be a business owner and deal with all that madness? How? But it works better when we own. And I want to thank everybody that's on here. Seneca Woodson, Happy New Year to you, sir. Tarina Benford, Michael Perkins, Charles McKeever, Bill Coney, Sylvia Franklin, Michael Johnson, my mentor, I love you, bro. Glenn Reedus, Dorian, Chemistry, always there. Neil Winston, Dion, love you, sister. Blanca, one of the great advocates for equity crowdfunding that did wonderful work with the SBAC and helping us get this done. Dean Kantov, Yunzai Yazil, Charles McKeever, and just a host of other folks that have been and are on this broadcast currently. If you think that this information is worthy of the eyes of other people, share the video. That's what I'm asking you to do, is share the video. I am going to do these frequently up to the point that we launch the Native Sons campaign. And each time I want to try to touch a different element of this thing that we're doing. Now, one thing I'll tell you is that very soon, I want you to think about this now from a political standpoint. Politicians are under tremendous pressure to bring you economic development. And in Chicago and in Illinois right now, a lot of us don't trust and believe in our political leaders. But I will say this, I'd like to thank Representative Carol Sente, who was the one who authored was the first sponsor, the chief sponsor of the bill when it went to the state to get passed. Marcus Evans, Napoleon Harris, they voted for it unanimously. They all played a part in it. And really what I really commend them on is they understood it. Ken Duncan, Napoleon Harris, Marcus Evans, they understand that this will actually work for us. And once we as business owners start to prove it, then we'll get a lot of support from our political leaders to do that. What's to stop the city from saying now, because you guys have shown the capacity to do so much with what you have, now it makes sense for us to transfer ownership of some of the vacant lots that the city owns that we can build on. One other point that I need to make before we wrap up is that these investments are not all equity investments. They can also be structured as debt. So in some cases, it's only going to be like you're a part of a pool or a crowd that's lending money to the business owner, not buying a piece or a fractional interest in that business. And that's important to know about, because some of those mean that, hey, I'm going to get X amount of percentage on my money in 6 months, a year, whatever that time frame is. I'll take that gladly and move on to the next project. And that's huge, because from a real estate perspective, if we did a 20, 30 unit apartment complex that's right now vacant, and you got those all over the neighborhood, you can reinvest in that, rebuild it, rent it out, rent that property out, and now share portions of the distributions in those rent with the people in that community that it serves. That's never happened before. And if that doesn't excite you, then go to bed. For real, that's got to excite you. Now, my role in this right now is to be a person that helps to educate you on the value of this. I played a part in helping with the SBAC and lobbying for it. On January 17th, there's going to be a press conference at 1871 headed by Howard Tallman, that's going to roll out equity crowdfunding on a broader scale and start to introduce these offerings, one of which is Native Sons of Chicago, on the Veslo and True Crowd platforms. Ours will be on Veslo. So if you want to take a look at some of the websites where you can look at this, I would encourage you to become a subscriber in these websites, because then you're open to see all of the information on the projects. Excuse me. Got a little parched there, but you're able to see the information on these projects now. You're able to look at all those documents and review them and get a taste of what this is really about. So the first one is Vestlo. That's VESTLO.com. Another one is the one I showed you here, Local Stake. That's local, STAKE.com. You have Fundrise. That's FUNDRISE.com. And WeFunder, WEFUNDER.com. Now, most of those, with the exception of Veslo, operate on a national scale, so you'll see a lot more projects and different things on those. On Veslo, you're only going to see one offering that's there now, but several other ones after that January 17th press conference are going to be unveiled for you to look at. So I encourage you to go there. Here is their site here. When you go in, you'll see a box that invites you to come enter your email, subscribe to the site, so you'll be able to become. And when those offerings come out, you'll get emails showing you on the spot, this is what's happening. You'll get newsletters and updates about what's going on with equity crowdfunding. And overall, I mean, it's going to be a wonderful, wonderful thing. This is the future of the economy in America and around the world, guys. There's already sites. I was talking to some people earlier today. They're doing global crowdfunding. So, you know, with bigger businesses and with other elements of crowdfunding, you can do these things on really, really large scales. But right now, my interest is in what we have to do to rebuild and clean up our community. It starts with economics, and it doesn't have to come from the pen of the mayor, the pen of the president, or the pen of the governor. It only has to come from your pen and your belief in the things that are being shown to you. The Secretary of State worked hard to build the trust factors to make sure that you have a limited risk of being ripped off in these types of situations. This is not something where you're going to look up and the guy going to get all the money and run off with it. They've been vetted well ahead of that time. So you should have good, viable projects that come out of this. And again, it doesn't mean that they're going to all be successful, because at the end of the day, they all have to manage these opportunities. So one of the things they say in the VC world is that they bet on jockeys, not horses. The business is the horse. The manager is the jockey. It's the person that's riding the horse that's the most important. It's who's managing that project. So you don't want a person who's been driving a bus for 30 years that has no experience in owning a restaurant to be the one to come out with a $4 million restaurant offering, unless he can prove that he has the experience or a team of people with him that have the capacity to run that business. And that's how we protect ourselves from reading, from studying, and from being smart about what we do. And with that, guys, I'm going to wrap this up. I'm going to stick around for a minute and try to take a couple of questions. If anybody has any that you want to type into the bottom line. In future broadcasts, we're going to talk a little bit more about the legal aspect of it, some of the hard economics of it, and just a little bit more about the types of businesses that we can build from this, and make sure that we keep everybody encouraged, informed, and inspired. So now is our time, guys, that we can engage and advance. Thank you very much for taking the time out of your busy schedule today to sit with me and to listen to this. I don't go live a lot. You guys know that. I don't post a lot of frivolous activity from my everyday life. So you know that this is important to me, and I want you to be involved. Make sure you share this video and others, share the time, share the comments, and any other aspect of this that you believe is right. And we can rebuild our communities ourselves. And I thank you again for listening.